Okay, I got to tell you, isn't it great to actually be at the Plaza Hotel in person? I think none of us even recognize that. And to actually be here alive and healthy is a good thing. Anyway, I want to thank Dean Chandon. I don't think, but for his leadership, we would even be in this room going through the enormous Byzantine rules regarding COVID, and I got to thank him for doing this. All of us should do that. So anyway, we are pleased and actually thrilled to have Marc Holiday here with us. I've been trying to get Marc to come back to speak again at the Capital Markets Conference. Again, he was always part of the Golden Apple panel for probably a decade, and he kept on coming up to me and said, you know, I want to say more, and I can't because everyone else in the panel speaks too much. And that's a true story. And I finally run into Marc at a Regional Plan Association meeting at his new unbelievable building at 1 Vanderbilt. And I pitch him again, and I pitched him on some financing at the same time. And I said, Marc, would you speak? And he said, I'll only do it if I could do the one-on-one. So with me. And he agreed, and we are pleased to have Marc Holiday, the chairman and CEO of SL Green, which is the largest owner of office space
in New York City.
In New York City, which is a lot. So what a special time to have Marc here, because you know there's a lot of naysayers saying we'll never go back to the office. The office market is dead. I don't want to go back to the office. I'm one of those people, but I will. And so we have sort of the ultimate knowledge of this on this one-on-one. So we should really be a good listener here and really enjoy Marc. We also have some pretty amazing slides which sort of depict, as we're speaking, what Marc is up to. And also following this, because Scott Reckler, who's the CEO and chairman of RXR Realty, another major office owner, had to travel at the last minute, and we actually filmed him. He's also an alum. Filmed him right before he got on the plane. So that will be following this interview. So my first question to Marc, anything else you want to say about SL Green and yourself? Or?
Not at all. Just want to thank everyone for letting me speak today. I'm excited to speak to everybody. It's a great time in the market, interesting time, and fire away.
Okay, so do you think there's a permanent change that businesses in New York City are moving to a more hybrid work model? And what impact does this hybrid model have on New York City office space? And I know office space, as we said in the previous panel, could be C, B, or A, and I think we're focusing on the A market at the moment. But you could talk about that. Okay,
well, it's a big market, 400 million square feet, made up of A, B, and C buildings. I love this market. I've been doing business in New York for my entire career, which spans just short of 35 years or so. And the last 22 of which I've been doing at SL Green Realty Corp, where we built a very formidable real estate operating company. We own about 30 million square feet throughout Manhattan. Own and operate 30 million square feet throughout Manhattan, makes us the largest owner commercial office in Manhattan. And even though we sell a lot of property, we're always developing and acquiring as well. So it's a transactional-oriented shop, and it gives us good perspective on the state of the market. We've transacted on 120 million square feet of real estate in New York City, which is, as you can do the math, it's almost just shy of a third of the marketplace. So
that's the size of most cities.
That would probably be number two.
Number two in the United States.
So we've done, between direct equity ownership and our lending platform, 120 million square feet where we put our dollars at risk. And it's just a wonderful city. So in terms of the trend or the question, hybrid workspace, sounds like a shareholder meeting. All the shareholders want to know, what about hybrid workspace? It's a good question. it's a trend that has been around for quite a while, and it's a trend that has, I think, accelerated during COVID because it gave employers and workers the ability to experiment in ways that they probably never would have or couldn't have nearly as quickly before COVID. It was forced experimentation. There's a lot of different schools of thought on this, and I tend to be on one side of this. I'm a believer in purpose-built office. It's what I've staked my career on. And I believe there is no better place to execute your business plan and for people to be mentored and grow and succeed than when they're pressing flesh either with guests, prospective clients, bankers, lenders, your coworkers, and your mentors and bosses. I can't even imagine a world, for me personally, it's a very personal statement, where I'm at home, in a den, living room, bedroom, trying to conduct business the way I do business. For me, every day, breakfast, lunch, dinner, today's no different, speaking engagements. I try to take 10 meetings every week, and I expect to get one transaction or deal lead out of those 10 meetings. Would be very hard for me to execute that game plan at home. So there's a question of what's feasible and what's optimal. Feasibly, we've seen the workforce, go to this flexible work model more than pre-COVID.
How would you define a flexible work model?
1 or 2 days a week of flex at home. I don't believe it. Look, before COVID, the average work week in office was about 4.2 days. So there already was some flex built into the system pre-COVID where everybody, or at least on average, people spent an average of almost 1 full day a week not in the office. Doesn't mean where they are, traveling, just not in the office. I think that will increase, but increase modestly post-COVID, probably no less than 4 days a week on average. Some companies, I think, will experiment with, or whether experiment or continue with 1 to 2 days a week of flexibility for businesses that think they can manage that. That really means out of the office, so that doesn't necessarily mean work from home, that's different, but it means they're on the road, out of the office, working remotely, whatever it may be, 1 to 2 days a week in the office, 3+ days a week. That's not radically different than how it was, but it is different. And I think that model, at least for now, is going to become the new norm for many companies. With that said, 2 things. One, I think there's still a level of competitiveness amongst companies, and I still think for people that are driven and want to succeed and companies that want to succeed, I see those companies still 5 days a week in the office.
You own the most office space in New York City. What's the occupancy of in-place workers coming back? Do you track that? Well, where was it at the low of the worst of COVID, and where is it now?
Look, going into COVID, our office buildings were probably physically occupied, maybe
not rented, but people actually going to work.
Rented 95%, but right. Physically occupied probably 70% plus on any given day. The notion that there was 100% occupancy in buildings pre-COVID is just not the case. This is a mobile workforce. People travel, people are selling, people are meeting, and people did work from home. So on an average day, I would say in terms of the card swipes, 70, 75%, that I would call total occupancy. And that number today is on peak days in the portfolio is between 40 and 45%. Wow. And on non-peak days, which tend to be Fridays, it could be below that. The good news is, from my perspective, I see every week 1 to 2 percentage points being added to that, and I expect very shortly our portfolio will be more than 50% occupied, which I would have liked to have seen that, probably 6 months ago. But from my vantage point, we're long-term players. Whether people are fully back in a month or 3 or 6 doesn't really matter, to me, Rob. It's what matters is that people are coming back, and the business leaders recognize they need to get people back for mentoring, for recruitment, for building new relationships. You just can't do it at home. And while there is a different way the office space is being used, there's really no shrinkage in footprint.
Well, what's that different way? We use a lot of terms here, and how is the office space being used differently?
Well,
I know we just moved into a headquarters building at Columbus Circle, and I get lost every day. I mean, I'm used to a tight office space, and I don't even work out anymore. I just walk around huge swaths of space, looking for people, and I'm kind of pissed because my office is on the inside now.
Right.
It's a little cube, and all the analysts' office are looking at the view in Central Park, but that's besides the point. So how has office space changed? We keep on talking about change. It's used differently.
No,
I see we have a floor plan here.
It's changed exactly as you just said. The floor plans have gotten much looser. A typical tech floor plan, you would have seen densities as low as 200 rentable square feet per employee or less. You don't see that on floor plans today. A trend that was beginning, a trend that was accelerated. Collaboration spaces, breakout rooms, lounges, cafes, wellness centers, studios. We've seen everything. Businesses are experimenting more. These are like pilot programs or prototypes that they're building within the space. We've seen people build broadcast studios, whiskey lounges, libraries, sleeping pods. This is the workspace of the future, not of the past. And it's taking everything that was off-site and bringing it on-site for the betterment of the employees and their clients. And it works. This experiment is a successful experiment. I can say it because we did the same thing for our employees at One Vanderbilt in March and incorporated a lot of what you see out there, including access to full amenitization and outdoor space. And the employees love it. I am 100% back to work and have been since June of 2020. That's 300 corporate. That's nearly 1,000 in the buildings. And we are fully back, and people are happy because it's a great environment.
Well, what have you done to protect the perception or the employees from COVID, like pre-COVID, post-COVID, in terms of space amounts? How do you make them feel safe?
COVID is, for us, we're nearly fully vaccinated. We've been back to work for a year and a half. It's really not a COVID conversation anymore in-house because we have no occurrences or transmission of COVID. But at the very beginning, to get people back, I know a lot of businesses are still at that beginning, we had a very robust program of recruitment back into the office where we served free lunches for everybody every day so that nobody had to, venture out if they didn't want to. On-site testing and vaccination, again, so they didn't have to venture out or be in places they didn't want to be while they were at work. We did in-home care child reimbursement for children for, a lot of our employees said, hey, my kid's out of school, someone's got to watch them. We said, go get that in-home child care and we'll
I personally, from a personal perspective with my own daughter and other women I know, that was the biggest impediment to back to work.
It was one of the big ones. But the other thing we did, and you see it here, I think this was one of the most innovative things I heard during COVID of a company that was back to work doing, although we were only a few companies that were open. We took the 20th floor, which was vacant and pre-built, and turned it into classrooms for the kids.
Wow.
And we told all of our employees, grades 1 through 6, bring your kids in. We hired 3 excellent tutors who would proctor and monitor as the kids did their homeschooling. They were doing school from home, only it was school from office. That's a new term, school from office. And the kids got so much more out of it. They had lunch together, they created bonds. After school was over, they did homework, movies, fun things. At the end, probably one of the most emotional moments for me was when the kids said, can I come back next year? To SL Green University, I guess. And unfortunately, I say, no, you can't.
I could see Andrew Mathias getting up there and being a clown.
We were up there, and it was a lot of fun. And the New York Times, back in October of last year, a year ago, profiled our company in an article for doing that and getting people back, and people gave tearful, accountments of what it meant to be able to have that. So anyway, that was during the height of COVID. I call it the easy stuff. I think every firm should do that because it was really not big dollars and it was big impact. You know, now it's different. We're back to work. Everybody's busy, and it's about you know, purpose, spirit, amenitization. That's what keeps them there now. It's not these things.
What are other companies doing? Do you see, because you have all these tenants in these buildings, do you see the company response?
You know, it depends on the leadership of the company. You know, there are some companies that feel an optional 1 or 2 day a week flex model works, and they're going to experiment with it. And then they always, you know, will say under their breath, but we really wish everybody was back full time, because, you know, I don't think there's any substitute for that. So, you know, I think it really depends on the culture of a company and the competitiveness of a country. If you want to succeed in this market, you have to be present. I don't know how to succeed remotely, you know, in this market. You know, we're building buildings, we're walking sites, we're, you know, material selection. Every day we're trying to create new tenant and partner and deal relationships.
So you, as one of the largest owner of office space in the city, do you provide advice to some of your tenants?
We do. And
how to design, or how to advise them, and how to
Yep.
bring back people to the office?
Our team goes in, we show them, again, when, you know, the COVID protocols, you know, you mentioned spacing, we have these new workstations. We did exactly what you said. We pulled all the senior management into the core. We put all the, you know, the VPs and associates along the window lines, created enormous, you know, breakout rooms, cafes, and good spirit. And then people walk that space and they pick up from that and they emulate parts in their space. And I look at what they're doing in their space, and we try and, you know, it's a great, it's a very exciting time. It's very innovative. And I think it makes really for a happy, healthy workplace and a better workplace. You can't compare this to our experience breaking into the business.
No.
You know, back in the late 80s, early 90s.
Well, I took the train with
they
you
were boiler room
weekly
shops,
from Grants.
We used to take the
White
train
Plains,
together, you know.
Scarsdale,
It's an entirely different experience. I get texts throughout the day, not just from One Vanderbilt. I don't want to, this is throughout the portfolio. We have, you know, done amenitization plans in 885 3rd is underway, 919 3rd, 750, Gray Bar Conference Center, 100 Park Lounge. You know, these are, the tenants love it, they use it, but it's also not just building it, you have to service it properly. You know, sometimes I see these spaces built and no one's in them. I don't know if you guys have ever, you know, these things and they just don't click. It's got to be really thoughtful, high level of design. We spared no expense. These places, when you walk in, whether it's One Vandy or anywhere in the portfolio, it's like walking into a fine hotel.
Yeah, I want to bring up a point from the previous panel, and I have to bring this up only because I've been in this business too long, and I've seen too many things. And during the dot bomb period, I call it dot bomb, I recall, and I was at Bankers Trust at the time, and doesn't exist anymore. And all the tech companies were hiring away our new analysts and associates, and we were doing everything to try to keep them, similar to what's going on now, right? And we let them not wear a tie anymore. Those are the days of white shirts and ties. And then we encouraged, you know, we gave free food in the cafeteria, upgraded the free food, and we had a refrigerator full of Haagen-Dazs, the expensive ones, the Haagen-Dazs ice cream bars, and everyone got a little heavy. We had dry cleaning delivered to their house. So we gave them computers at home for their personal use. And it was kind of interesting that the refrigerator was always empty Friday. For some reason, it was empty. During the week, they just went in and rampaged the refrigerator. But it wasn't until the dot bomb came, well, all that went away. Just went away like it never came, right? Never happened. And flexibility went away. Free food went away. And if there's another recession, if the sell side, i.e. the employee,
Right.
doesn't have the power they have now, will all these concepts of better officing, better equality,
Right.
better design go away? Do you
Yeah,
see this
I don't think
changing
so.
in
I
a
think these
recession?
are changes that are here to stay. They're great changes. They're logical. I don't, you know, to me, there's nothing. What goes away in a downturn is the excess, you know, the stuff you can part with, the frivolous stuff. this is all business accretive. You know, you do better business in purpose-built space. So what we're seeing is a little lighter usage per square foot, but footprints that are staying the same or expanding. We're going to lease close to 2 million square feet this year. That's a lot of square footage, you know, for one company in 1 year. That's arguably not, you know, supposed to be a great year. We're having a great year. Last year, over 1.4 million square feet. These are companies that are making long-term commitments. Our average lease term is still 10 years plus, or 9.8 plus. So these are companies that know where they're going, and in size, they're recommitting or making new commitments to us to the tune of almost 2 million feet, with lease terms of 7, 10, 15, 20 years. So that's got to, you know, a light bulb has to go off. These companies think and know that they're going to use the space as almost like a hub, you know, as a hub where, you know, everybody can go to, whether it's 5, 4, 3 days a week, doesn't matter. It's the hub, and the hub has to be, you know, much different than it used to be. It has to be, you know, very compelling. I don't see that going away in a downturn.
Let's talk about actual office space that's being built and something that's near and dear to my heart, the transition. And we've all seen it, of the Grand Central area, which SL Green has really put their money where their mouth is. And in my mind, and I've been there in a couple of times in terms of meetings and et cetera, of One Vanderbilt. And I never will forget the time I was walking when they had just demolished the Roosevelt, which is the Roosevelt.
No, the 51 East 42nd, Modell's.
Yeah, no, the whole block.
Yeah.
I called you.
Yes.
I remember calling you. What did I say to you? Do you remember?
Might have been turn it into a park.
Oh yeah, exactly. So for the first time, I called Mark.
I think Rob said, why don't you do the city a nice turn and turn it into a beautiful Grand Central Park?
He remembers this. So for the first time, if anyone saw that, that side of Grand Central, this magnificent historic building, no one ever saw that facade. And all of a sudden I'm walking by, I'm looking, the sun is shining, and there is this magnificent facade along Vanderbilt. Now, granted, it was dirty and disgusting and had sit on it for very years. And I called Mark and I said, thank you for delivering this view. Why don't we make this into a park so everyone can enjoy it? And he said, well, Rob, if the city pays me, I don't know, some astronomical sum, $1 billion, I'll be glad to do it. But until then, I'm building my building. So let's talk about the transition of the complete movement, in my opinion, of the epicenter of New York City office, having been downtown, Park Avenue, right, moving to the West Side Yards. I truly believe that the epicenter, given what Mark's going to talk about, is going to move back to where it all began, Midtown Manhattan and the Grand Central area.
Well, I do remember that well, and it did look really, it was quite a sight to see, you know, that enormous void in the middle of East Midtown because it's so dense, and that was the density was because of its success. More Fortune 500 companies located in East Midtown than any other submarket in the country. But because it was so dense, you couldn't build, right? So we had to, along with many others, champion for Vanderbilt Corridor rezoning, East Midtown rezoning, the ability to go high with transferable development rights at market, no subsidy. I want to say, you know, we full price air rights in order to make the economics work for us to demolish what were fully occupied buildings and go tall. It was a monumental risk. You know, this was like you know, we went all in on this, and we could because we own so much in Grand Central area, and as much as we measure returns relative to a building, I measure the returns here relative to the market as a whole, because the building has its set of, you know, IRRs and everything that you guys look at, but also there's been a premium now to this market because of the public realm improvements, the transit improvements, the additional development sites that now will come online that Rob was talking about. You see some of them here that are either happening or, you know, or planned, not the least of which is the one directly east of us, which is the Hyatt site that Scott, who you're going to hear from shortly, is going to develop with his partners, TF Cornerstone, and, you know, and do another, you know, substantial development on that site, replacing a hotel that probably, you know, whose day best days are in the past. So with that said, this has set off just an extraordinary realization that we don't need to go west or elsewhere within Manhattan to do good new construction. We can do it with the right zoning techniques right here in East Midtown. J.P. Morgan, just to the north of us, is going to do over 2 million feet, over a 1,000-foot building, and it's going to be awesome. It's going to be fantastic. I credit those guys with that kind of vision and belief. That's a 50-year plus commitment. That's not a 10, 20-year commitment. That's a 50-year plus. Same thing, really, that you guys did.
Right.
That Deutsche did up in Columbus Circle.
I'll never forget, I used to bank, and hopefully do it again, this fellow named Eyal Offer is one of the wealthiest Israeli families and largest owner of shipping in the world. And he dabbled and still is investing significantly in the city. And I asked him, Eyal, what's your philosophy? And I can't really speak in Hebrew, but he said, I'll buy anything within walking distance of Grand Central. And I think if you could sort of go through the importance of multimodal transportation, the direct connect to Grand Central, the importance of not getting wet when you walk outside,
no question,
the east-west connection, and really where this density would work, where you have that transportation nexus.
Right. This is sort of the ultimate in transit-oriented development. I mean, it's right on top of the train station. I think there's 8 subway lines and 1, commuter rail line, soon to be 2. Long Island Railroad will be doing direct stops right at Grand Central beginning December of 22, only a little more than a year away. And, it's wildly commutable. On the way in, I was comparing notes with someone who told me their commute from office into the train was 7 minutes. I told him I had him beat with 4 minutes and 10 seconds. But, that makes a huge difference. But it's not just the commutability. I think the pillars of One Vanderbilt were really, the aesthetic design, which you see here in the sky. I wanted something that really made a statement on the skyline as a modern interpretation of point-top buildings in a way that I felt was very elegant and respectful of the other great point-top buildings around the city. Sustainability, wellness, amenitization, commutability, and efficiency. If you can put all that in one package, well, you've got a very good product. And, people sort of marvel at the rents. I don't marvel at the rents.
Where are the rents? It's a little shocking, frankly.
The rents are, it depends on where you're on the building. The early rents in the base of the building were probably $140, $150 a foot. In the midsection, maybe $165 to $190 a foot, and everything in the tower above is about $225 to $300.
So these tenants are paying a super premium to be.
It's not a premium. That's right. It's value.
Value, okay.
It's value. I don't know where I don't see any premium. I think everybody here, go poll these tenants. They think they made a smart, great deal. They're happy as can be. Not one of them would undo or has anything but accolades and happiness. And I'd say more than half the tenant base has already expanded during the time of COVID.
But be able to commute from the suburbs directly into your building and also state-of-the-art design. I know COVID's still out there. That had to be a big draw to these tenants. You were able to monetize
I think it's really all the elements I said. These are big, sophisticated tenants who really are very discerning. It's not just hey, it's an easy commute, because there's other buildings that are an easy commute. That's not unique to One Vanderbilt. So it's really all of that. They want to check every box. This is MERV 16 filtration. It has the cleanest quality air of any multi-building in New York City. It's hospital-grade filtration coming out of these systems. It's called MERV 16. LEED Gold under version 4.0, LEED Platinum under 3.0. It's beautiful. The views are spectacular. The amenities, which I'll show you in a second, are things you pay for. And the respectfulness of the building to its surroundings. You see how we cut away the base and made it 100 feet of vision glass to retain those views that Rob was talking about of the landmarks in this area, which there's no greater concentration of landmarks, I don't think, than within Grand Central. We brought the terminal inside our footprint, both on 42nd Street, you see here, and cut out a 3,000-foot transit center on the corner right across Vanderbilt Plaza that leads directly down to the B1 level. Here you see, we brought landscaping in and beautiful trees. We made a pedestrian plaza by closing an area that really was fairly...
Yeah, that facade you never saw.
You never saw it. And we cleaned that, and by the way, that was outside
When I used to work at Bankers Trust, used to walk up, and that was a great spot for the drug dealers soliciting me for various...
Right now, if you go there on any given day, there's people sitting, having their lunches, and just sort of marveling at the beauty of Grand Central Station. It's one of the most iconic landmarks we have in the city, and now it's cleaned up and showing its best. The plaza, these are great areas of respite, for the public, and hopefully aesthetically pleasing with the landscaping jobs we do. We brought art into the lobby in a way that's visible from outside, both with that beautiful bronze leaf art wall that Jamie von Klemperer designed, or these monumental sculptures by Tony Cragg. It's just, it's all fun, but, food and beverage, New Yorkers want to eat. And there was this whole narrative out there that, sort of fine dining was dead. Well, fine dining ain't dead, because on May 19th, we opened Le Pavillon in kind of this, soaring restaurant space, and we have not had a table at dinner vacant since we opened. Waiting list on any given night could be 200-300 people per night, waiting list. Which is just wonderful testimony that, people still want to get out even during, the summer months when people said, you're not going to have a lot of people. In Midtown, you know what? We were packed every night, and people love it, and, it's now a great new event space for downtown. A lot of industry events, a lot of philanthropy events are taking place here, and it's become really a part of the community. And this is, if you haven't had a drink at the Le Pav Bar and experienced that view and that site, I encourage you to stop in for a drink. We're going to put a little sushi bar down at the B1 level and sushi restaurant, Omakase, which oddly everyone's waiting for this more than anything else in the building. They want that 10-person table, Omakase, and takeout window. And here you can see some of those images.
So this is a great transition into people coming back to the city. And tourism is really the missing element, foreign tourism. And how do you see that tying into the revitalization of the Grand Central area, the city in general, and how do you think SL Green could help make that happen?
So, pre-COVID, there were 65 to 70 million visitors a year coming to New York City. That number dropped to, I don't know what, in 2020, it's rebounded to about 35 million this year, and that's almost all domestic until last week, or maybe it was Monday. It was either yesterday or a week ago, that the borders opened up and the tourists now are coming back. And I am wildly, wildly optimistic that, with all the marketing that the city and state are doing, all the money they're throwing behind, get back to New York for Broadway, for sporting events, for everything, museums, restaurants, hotels, everything New York has to offer. I feel very confident we're going to be right back to those pre-pandemic levels. And I think of, 70, 80, 90 million, visitors a year, and how will New York accommodate it, right? Will we have the infrastructure to accommodate it? But, as part of that support, we built something. Well, I'm going to go through the amenity package real quick because I know we're a little time constrained, and get to the summit. So we wanted the top of the building.
You can actually see that. Did everyone look up at One Vanderbilt at night towards the top?
You'll see the top three
floors.
You see
almost like crazy lights going on. That's the summit.
The most valuable floors in the building we dedicated to make sure that the public would have access to those floors for these infinite, incredible views of New York City. I don't think I've ever seen the New York skyline like you've seen it at 1,200 feet in the center of Midtown, looking 360. It is just, it's awesome. And to amplify those views, I partnered with a guy named Kenzo Digital. It's really a firm and a guy named Kenzo Digital. He's a wonderful artist, producer, visionary, and together we made this room called Transcendence, a fully reflective, mirrored environment that amplifies the views during the day. You can see different. These are actual photos, not renderings. It's just, and the real thing looks even more spectacular. People, I mean, since we've opened it, it has been essentially sold out every hour of the day, and that's without those tourists coming back to, to New York yet. And, people are just, universal in their amazement of how much fun it is during the day and at night. We have this thing called Air at Night, where we've curated artistically sound and light shows, and that's probably what you see at night.
It's unbelievable.
To create these amazing environments that people come, they take photographs of themselves, they do wardrobe changes. People I've seen come with 4 different changes of clothes. They go run into the bathroom, change, come out, photo shoot, video shoot, back and back. People just lie on the floor, and look up. I mean, it's amazing to see New Yorkers back together again in a fairly dense way. Smiling, happy.
You have that shot of them looking down of the glass. Do you have that here?
I think we might. This is an interactive room with, which is the floating spheres room, which people come and they play. That's the shot I think you're talking about, where we cantilever out over Madison Avenue, and you can, stand there and look down, and you're floating in a glass box above Manhattan. It's pretty chilling and cool. There's some of the views south of Empire State and other. And then we have these 2 glass elevators, which if you haven't seen them, this is, I would put this on a must-do list. I've done it now a number of times, and each time it's, doesn't get old. Glass elevators.
I would use, like value, I would use the word terrifying.
Some people are terrifying, thrilling,
right.
meditative.
It really was quite unbelievable.
It's whatever you want it to be. It's different in different weather, different times of the day. But these crawl up the side of the building,
It's unbelievable.
About 125 feet, and nest at over 1,200 feet high in the air.
Is this the highest observatory or?
I think the nesting point on the elevators, you can see where the rails go to the top of the crown, is I think the highest viewing platform in Midtown. Still not as high as World Trade.
Yeah, but World Trade, you're looking at water or you're looking north?
It's a different viewpoint. This is very central and emphasizes all views. It's really, it's a new, the way One Vanderbilt is a new category of building, I look at Summit as a new category of destination entertainment. It's really not an observatory, and I didn't build it to be an observatory. I built it to be a place that you go to have fun, take pictures, listen to music, eat, drink, and hang out. It's a great place.
Where else in New York City do you think, I know this is not on our list of questions, but where else do you think there's a transformative event going on comparable in some way to the Grand Central area? What other part of the city? Obviously, the West Side Yards was an example of.
Yeah, well, I mean, I think the Shed
Grand Central area, Midtown East is another one. Where else do you see that eventually happening, or could be happening? Maybe in a different way.
I think it's not so much location.
Madison Park, or is that
the experimentation of Tribeca Film, which was always pretty much downtown centric and inside viewing. They experimented this past year all over the 5 boroughs of Manhattan with big pop-up movie screens outdoors, so more people could enjoy it. And it brought Tribeca, I think, into the boroughs in a way that they hadn't done since 9/11, when right after 9/11 when it was founded. It's those kind of experimentation ideas that I think will stick for people. Harder to do, harder to control. You got weather and and all sorts of different elements. But I think this notion of bringing these experiences to people in different ways is something that's here to stay. And I think Tribeca, did a good example.
Well, it's almost a function of bringing, it's equity, right? It's bringing these new experiences to those neighborhoods.
There was Broadway in the park. More outdoor concerts. It's outdoor eating. It's really sort of activating. Everyone looks at Manhattan's greatest assets as the built environment, but the natural environment has a lot to offer. And when you combine the two, very exciting.
Yeah, I think it was 3 years ago, one of our panelists on the Golden Apple panel, again, you weren't on that, said that the suburbs are over. The suburbs are over, meaning no one wants to be in the suburbs. No one wants to buy a house in the suburbs. No one wants to go to the suburbs. And then COVID happened, and people wanted to only be in Manhattan or in parts of Brooklyn. Do you see that now? Are the suburbs over, or they're coming, or your success of One Madison and One Vanderbilt, which is a whole other story, and leasing, that dispels that?
Yeah, I don't see it as an either or.
Is the creative class coming back to the city?
The creative class never left the city. It left temporarily. There is so much intellectual capital in New York City. There's so much vibrancy. There's so much diversity. I mean, there's no place in the world. It's hard to compare it to our suburbs. There's no place in the world like New York. And I don't think it left. I think it, took a break. And it gave, and by the way, for people who've been living a certain way for 20, 30, 40, 50 years, maybe a nice break to experience something different. But as soon as the all clear signal sounded, everybody came back, and in droves. I don't know if you saw it this morning. They were talking about condo and co-op sales. We're at record levels since 2007 or 10 or something like that, or 13. At least in a 10-year period of time. So New York is back. There's no question about that. But I don't think it really. I don't think people really ever emotionally left it. I think people took a little hiatus.
Well, we have a tight schedule, and I really want to thank Marc for joining us, especially for the one-on-one. Really wouldn't have this chance to do this level of dialogue, and also thank him and his company for personally, revitalizing Grand Central, which is the epicenter of New York City. It was and always will be. So thank you very much, Marc,
Thank you.
and SL Green.
Good speaking.